So, again, here we are on another episode of Sweet Talk. And today, the guest that I have is, fortunate for me, someone I consider a friend. And there's a story behind that. And a hero in some light. I mean, when it comes to my finances, being a young man, a young business owner, entrepreneur, very often I find myself coming over particular information, and the very first person I'll pick up my phone and call is my dear brother here, Lyndon Russel. Legally, he is an insurance agent, but trust me, he is so much more. And today, just along the lines of what we have been discussing in regards to just men, and like just helping men to actually come back to their rightful place, actually having that authority figure, being the provider, talking about the three P's: a provider, a protector, a priest. Today, Brother Lyndon is here with us to share with us from the wealth perspective in regards to generational wealth and more so on insurance. So, Lyndon, how was that introduction?
That introduction was was a lot more than I expected, and thanks for the opportunity for having me here. Right?
It's so much more I wanted to say, but just now by right I'll be able to say so much more by the next one, definitely. But
definitely so.
You have been such a great impact on my life. So this sit down was a must.
And again, thanks for allowing me the opportunity.
Yeah.
This is a first for me, and I hope definitely it's not the last. So I'm just as excited as you are.
Awesome, awesome. So, well, today, just before we actually even get into it, just for the persons to get to know you, just want to find out, Lyndon Russel, insurance guy, was that always the dream?
That wasn't always the dream. You know, growing up, we tend to be lost at some point in time. However, customer service was always the passion before, and I mentioned this earlier on today, you know, before I got to where I am now, I started pushing trolleys right out after school in a grocery.
Yeah. And
I have persons I would have met then who know me now, and this is in the mid-90s.
Wow.
Who know me now. Somewhere along the line, all my jobs have always been sales oriented and customer service oriented, right?
So okay, not to jump the gun, because I realize you're ready to talk and go. Just the way how you're breaking it down, and mind you, you break down stuff to the most simplest form, and I could see this will be a very smooth for an interview, but just sharing what you shared in your childhood in regards to pushing trolleys, it makes me want to go back a little further even. So Lyndon Russel now, as they say, person see it now and they see the difference. So who was Lyndon growing up in the community, like adults? Okay, so from adult perspective, looking at Lyndon back then, who was Lyndon? What kind of child was he in the community? Was he a menace, or was he of great?
Being a menace wasn't an option with my dad being a police officer.
Wow.
So Lyndon growing up in the community was quiet. You know, very to himself. I wasn't, you know, in any way raucous, always getting in trouble. Back in the day, compared to now, my dad ain't going an easy up on no discipline.
Yeah.
You know, but as an adult now, the life that I live now, to some extent, I understand what it is he was trying to do, right? And just to share a quick story, at one point in time, you know, my dad was talking about punishment and not punishing his grandchildren, right? Yeah. So my nephews and nieces are like, what are you talking about?
Yeah, they get away with everything.
You didn't spare us. And
spare your unspoiled child.
It was one of the most profound moments I had with my father, because then he asked me, he said, let me ask you a question. He said, you live Oropuch, right? You remember what inside the Oropuch police station looked like? I said, no. He said, you went to school in Faizabad. Do you know what inside the Faizabad police station looks like? Okay. And at that point in time, I still didn't get it.
I catch it. I believe I catch it.
And then he said, do you know what inside a courtroom looks like? And then I caught on. He did what he could have done at that point in time, the way he knew how to do it. And it kept us on the right side of the law.
Yeah.
Right? My brothers and sisters, everybody, you know, and that discipline is something I take with me on my day-to-day now with my clients. Just the same way he did what he could have done, I do everything in my power that I could do, within reason, of course, with my clients, and you know, and it's a certain discipline I bring to the table to try and assist them when coming to their goals and their aspirations and their dreams, trying to figure out where they are now.
Yeah.
And where they want to be, as I mentioned before.
So speaking about the present as the, well, like your career right now, being an agent and a very good one to boot, what inspired you to actually do it? Like, was it that someone in your family may have had some ordeal and you saw that potentially this could, so that inspired you to go there? Like, what inspired you to choose this particular career path besides sales? Or is it that you just happened to come here and you're just passionate about everything, so you just made it work?
Two things. From a personal perspective, you know, when you see things happen within your household, especially when coming to sickness followed by death. So that is one. And me growing up outside of the household, you know, they have a saying that you have friends who become family. Right? So, yeah. And there are a lot of my friends who have had an impact on my life growing up in terms of the guidance, in terms of, you know, the knowledge they would have bestowed upon me at that point in time that I could now use, right? Again, in my day-to-day. So it's like, this is a way I get to give back.
Yeah.
You know.
So
much has been done for me.
Oh, you see how this guy, look how he just bring back that day, and I could actually catch it before he drop. So I could even say to Boot, like how your father would have shared that the way you speak, he breaks it down. Like he gives, you know, Jesus speaks in parables in the Bible. That is the same way he brings across whatever point to the simplest form to make you understand. So with that mode, just to take off a little tip off of the iceberg, breaking the ice. Growing up, hearing about insurance, my sister, first time hearing about insurance, my sister used to work at an insurance firm in Grenada. It was a British brand. That's the first time I came around to understanding about insurance, but still, off of hearing the adults speak about it, they always just say, well, insurance is something that if it is you take it on your own, it's something that you will take so that when you die, you go leave back something for your family. But I've never been able to actually come and reach with persons who may have to actually understand how it works. But everyone have this concept, insurance, you take it and it's just for death. Until I started my entrepreneurial journey and I started to tap into podcasts, the right information, and I understood, like for instance, Walt Disney, this place people travel from all over the world to go, was able to build such an empire with insurance, and he was alive. So quickly, just share with me based on that concept, why is it for years, was it that the agents weren't that effective expressing or relating the value of insurance? Why persons have that perception of it?
I definitely won't say that the agent wasn't expressing the importance of. I guess everybody's experience is different. You know, your parents may have a different experience to your parents' neighbors, right?
Yeah.
So what has also happened in addition to that, things have changed. The times have changed.
Great.
Mortality rates have changed, right? People are either living longer due to lifestyle and medicine, or they dying faster due to more chronic diseases and more critical illnesses, right?
Correct.
So definitely the insurance industry throughout, and this is worldwide, had to counteract what was happening. So an insurance product from 20 years ago wouldn't necessarily work now, depending on what you're applying that product to. So just as things change, lifestyle, societies, the world in itself, products had to change and insurance companies had to change to really be all that they could be for their clients. Insurance is not where you take out an insurance and it's much more than you taking out an insurance, and if you die, your family ends up with something. That's a death benefit.
So, okay, and to that note, so just one. We'll elaborate on more,
Right.
but just one life benefit of insurance and make it a bar.
One life benefit of insurance. Well,
And to make it even easier from, say, let me put it in an instance, a young business person like myself, right? I want to have or get to do something within the next few years. I mightn't have any physical assets. Insurance. How insurance could help me with
insurance now bills, depending on the type of product, you could have a plan that builds a cash value, right? So that's a living benefit. Although you have insurance in the event that you die, your family will get a death benefit.
I understand that, but I mean, it have the banks. I mean, you could just put that in the bank and get whatever benefit from the bank, don't you?
Well, I can't speak on the bank, right?
Yeah.
But at the end of the day, other than the financial security is going to provide for your family, the cash values that your investment that you would have made could also assist you, as you rightfully said, as a young person, as a young entrepreneur, right? And that could be used to transact business as collateral, to do business with the bank.
To do business
because
with the bank.
if, let's say, you don't have a sizable amount of money or anything, when you go for a loan, the bank is going to ask you, what are your assets? Do you have collateral?
Yes.
Especially if it's something like a mortgage. And they may ask, do you have a life insurance policy with a cash value? So starting at a young age, in 10 years time, you have this and you could say, yeah, and your cash value is growing, and you could use that for collateral, for a loan, again, for mortgage, for business, that kind of thing. So insurance products now help in life as well, opposed to in debt only, right? So for instance, moving away from life insurance, critical illness coverage helps while someone is alive, right?
Yes.
So a critical illness is defined as an illness that would either kill you or severely affect your way of life.
Yeah.
And we know critical illnesses are like cancer, heart attack, stroke. But is everyone really aware of how much a critical illness could cost? Basic heart surgery, bypass, bypass surgery.
Not only that, just sometime to, like, I have a friend and she had a bit of a vision and she had to go, I won't mention the name of that private institution, but the few nights that she spent there came up to close to $60,000 in that.
And again, insurance is a tool used to transfer risk. That's all. In the simplest form.
Yeah.
You're transferring risk. In the event that you die, you have a policy that will give your family replacement income that you would have brought to the table. Critical illness, in the event that you were to succumb to cancer, heart attack, stroke, that will take care of immediate medical bills, right?
So even, like, just to even backtrack a bit, could you share, like, I would have mentioned the Walt Disney instance, just for someone to understand, like, how insurance as a living value, how he was able, would you be able to share on that?
I'm not
not to give, like, the exact, but just for persons to have, like, a concept, like, how you could actually use insurance to actually do or make investments. Because based on my understanding, following his story, like he didn't really have the finances. He went to the bank, he wasn't getting it. But he was able to use insurance, and as you mentioned, as a tool.
Right. Now,
So,
I don't know if he would have inherited a lump sum of money,
that is another key for us to come back to, inheritance.
right? Or he would have had something personal that would have matured, and he now has this lump sum of money.
So another thing for us to speak on. So
it's
the maturing
it's a lot of
of the
avenues.
assets.
It's a lot of avenues, right? Now, an insurance could play a part in someone's life where they come into inheritance, a large sum of money. And that could be significant changes in their life, right? It could also mean stability, right? In the event of a home losing a breadwinner, right? It creates financial stability. There's a bit of shake-up,
Yes.
right? But the home doesn't lose that financial support because someone is physically not in the picture anymore,
Yeah.
right? And as a young entrepreneur, if you were to come into an inheritance, now you work for yourself, you're your own boss, you're doing your own thing. But if you were to come into an inheritance, $1 million, $2 million, $3 million, $4 million, the possibilities of where you could reach and in the time you could get there
Yeah.
is endless, with the proper management, of course, right? and that is another avenue with respect to asset and money management, because getting a lump sum of money and not knowing what to do
or how to
and
invest
how
it.
to do it, you know, is something that we really need to be educated on.
So, okay, even with insurance and the education aspect, so like, as you said, it could be something as simple as income replacement. It have
Yeah.
insurance for that.
Right.
So we had a talk on that, but even greater, but we could even speak on that. So like for income replacement,
Right.
again, most persons when they think about insurance, they go to work, they clock in, and they are told by their company that we're paying your insurance for you. I personally have known persons who would have worked for years and they may have changed their jobs, go to another business place, and the insurance that the company was supposed to be paying is non-existent. So like for even the average person, like even taking on their own insurance, or they have a company, like say they are handling this insurance for them. Just some pointers, not really touching on anything specific, or like what are some things that they could do to help mitigate the risk of actually thinking that something is being done
Alright,
and it's not.
So the thing is, right, company or group insurance is different to personal insurance.
Yeah.
Personal insurance, that's your policies, that's your investment. You could take that anywhere you want to, because it's your policies. Group insurance is a benefit. It's a perk to an employee, right?
A perk.
It is, and it's
and
a
it's
good
really-
perk too.
Yeah.
Because group insurance comes with, you know, health insurance coverage. It comes with life insurance coverage. It comes with a bit of critical illness coverage. It comes with a pension plan, depending on who is the company you're dealing with.
Yeah.
Right. But it is a perk. You want to give your employees what you think is the best, right? However, outside of that, in your case, you're not working for a company. It's your responsibility to give yourself and your family the best.
You see now, look, the thing is, it have so much a source. As I said, like, we speak privately about certain stuff, and just by right, he has some boundaries that he have to share, but I personally could share, not outlining the details.
Yeah.
Like, I have endowments, right? And basically, in regards to having insurance and having an endowment, basically, the one that I have, it's a 25-year span, and I am paying towards that. And as a lot of persons know, in regards to making deposits to the bank, you could go and make deposits to the bank and you're saving, but the interest that the bank would give you in return, I'm speaking from experience in regards to insurance. especially for an endowment, it's even greater. But still, just speaking on endowment, just to elaborate and just give a bit of a clarity as to
Basically,
what an
with
endowment
an endowment is a large sum of money.
A
Right?
large
That's
sum.
that well, as a sum of money.
Yeah.
Right? And with endowments, what you basically buy into is time. You're going to save this money over a period of time, right? It's going to be protected, and at the end, it's going to be highly beneficial to you, right?
So and even on that note, as you mentioned, like going to the bank using insurance as collateral. So say for instance, speaking on parenting, fathers trying to put their kids in a good place. Say you were to take out an endowment for a child.
Right.
And that family, just within the means of what they have, they are renting, the father might have a vehicle, but outside of that, they don't really own any significant assets. So just asking, is it possible now that that child, say they were to start paying an endowment for that child from the age of 10 up to a particular age, when that endowment, since you said there's a lump sum of cash, but paying it over time and what the insurance would match depending on the company, could they now use that endowment that will be accumulated over time as a security to go and do certain stuff with the banks?
Yeah, because endowments do build cash value, right? But you see, the thing is, endowments, life insurance, these things are designed to satisfy a need, right? Given the example you just used, immediately me being me, I'm thinking that I wouldn't recommend an endowment for somebody if they don't personally have insurance, right?
Yeah.
So what you do is really understand from the client side, again, their current position financially and what their dreams are. And if their dream is to financially secure their family, then we deal with that.
So, okay,
If-
so give me that, how you see that structure playing out. You come into a family.
It's different case by case, but generally speaking, it's an umbrella. Let's put it this way,
An umbrella.
right? And under this umbrella, the breadwinners have insurance. Because why? They're supporting the families, whether it be one breadwinner, whether it be two. They are supporting the families financially.
Correct.
They're taking care of the day-to-day bills, all the commitments, all the responsibilities. They're sorting after the children and the children's future education, right? If they were not in the picture, what now happens?
Yeah.
And it's not only about saying, okay, you're the breadwinner in a family, buy an insurance policy. It's about the right policy at the time. It's about the right amount, right?
Yeah.
And it's about comfort and satisfaction. So much goes into, you know, I don't want people to think buying an insurance policy is just, hey, I want $1 million or I want $500,000 or, you know, and you just
Yeah,
go and you pay for something. It have a lot of
medicals.
concepts that goes into it.
Yeah.
A lot of questions to be asked. And a lot of understanding, because that policy plays a very important function within a household, right? There's a saying with respect to education, you could either save today, right, and pay less tomorrow, or you or not borrow tomorrow, or you don't save today and you borrow tomorrow, you pay more tomorrow.
Right, so the sacrifice has to be made.
Yeah.
So even back to endowment, like what it is you might have wanted to share on that?
Now, you mentioned sacrifice and you mentioned your personal endowment.
Yeah.
And your personal endowment will give you, again, a lump sum of money within, given your age, I don't know if I should call it age.
Yeah, of course, everybody knows Joe as a young, I might have a mature face, but yeah.
Right. Be given your age, an endowment in 25 years gives you a lump sum of money in your 50s.
Yeah.
And with that lump sum of money, it gives you options. one of the things you could definitely look at is early retirement, because you would have made a sacrifice now that puts you in a very good place.
Very good place.
Right? And we spoke about income replacement.
Yeah.
Right? Remember, you're your own businessman. You pay you.
Yeah.
And by doing what you would have done, making that sacrifice and saving that money, it's not necessary for you to work to 65.
No.
If you want to work to 65, it's because you genuinely love
Pure passion. Yeah.
pure passion, what you do.
Personally, to be honest with you, I think retirement is a killer.
Is
like,
that?
a killer. Like, in the sense, I still, like, even reflecting on, like, some of the elders I know in the past, like, when I see, like, somebody actually, like, retire, I say, like, they just stop working.
Right.
They're not doing it. I find retirement on a whole is a dead
But
sentence.
let's say in your mid-50s, you decided to take your entrepreneurial skill and channel it
Channel it, yeah.
in another direction, and you needed funding for that.
Yeah, well, right.
There goes your funding without having to go to the bank to borrow,
Yeah.
which you now have to qualify for, which
No
you now
longer.
have to provide documents stating that you have the ability to repay this, right? So the decisions we make now definitely would affect our future.
Okay,
Right.
so hypothetically speaking, so having this endowment, it accumulates a nice sum. I have the option, yes, at the age of 50, I could pull out this lump sum. But if it is like I want to leave it there and take a loan against it.
Well, when you say leave it there, during the time frame of the plan, if you wanted to take a loan against the plan, that is an option.
So that is
with,
an option.
With endowments,
With respect to
right?
the value of
With
the lump
respect to
sum.
the value, cash value that is. It depends on at what time you want to take this loan during the time frame of the plan, right? But yes, you have options. And that is an easy fix too, right? But it allows you a lot more flexibility with less red tape. And that is just one particular product. In a household, as I was mentioning to you before,
Well, yeah, so from a household perspective.
well,
so
from
like,
a household perspective, based on that household, you could have life insurance, which covers the household. You could have critical illness coverage,
Yeah.
which is more geared towards the adults in the household. You could have a health plan, which will take care again of the entire
The household.
household, and that is medical coverage, dental and vision, that kind of thing. You could have an education fund, right, to sort out the kids.
Yeah.
You must have some form of retirement planning inside of there to ensure that you could retire comfortably with enough sustainable income.
And the thing is, like, okay, so before, persons would just have the assumption, okay, you get insurance, it's something that you benefit when somebody dies, nothing to do when you're living. But mentioning so many different plans, from the critical illness to the health plan and the different, the education fund, as you rightfully said, yes, it might be a lot of different titles, but as you said, the packages or the policies are built around after expenses of the house. So like how you go about pricing, how to advise a family on how to take that.
Well, based on the family's budget and the family's disposable income, not because someone has a disposable income of $3,000, you take that disposable income and you just buy insurance products. Because within a household, there must be an emergency fund.
Yeah.
Whether you have this emergency fund as a special account in the bank, or you have it as a special account easily accessible in a credit union,
Yeah.
which is also beneficial to a household in terms of saving money. You get interest, you get dividends, you know, and you have options with the credit union when coming to borrowing and stuff,
Yeah.
right? So
So creating the policies is all geared to the disposable income, but still at the same time, pay in mind not to basically absorb all of that. But
policies, an insurance portfolio within a household is designed, yes, using the disposable income, because you want to design plans and packages that that household can't manage, right? You don't want you, and when I say manage, that can be paid comfortably, and it's not the wisest thing, as I said, to use up all of the disposable income because you need emergency fund. So there's something called a financial planning pyramid,
Yeah.
right? And that pyramid starts with wealth foundation. So wealth foundation would be insuring your assets, because we were talking about just now insurance within the household. We're not talking about insuring the assets. We're not talking about the actual house.
Yeah.
We're not talking
Yeah.
about insuring the car. We're not talking about insuring a business, right?
What, and fascinating enough, like, what in Trinidad, I don't know if they do it, but, and I believe they do, because even like insuring certain assets within the home. I remember when I was in the air conditioning industry, I went by a client and he had a really big TV. And he told me he had insurance for the television.
Yeah.
A smart TV. That TV could have been like about a 18 or 20 inch. And he says the TV had insurance.
Why not? You could insure your contents of your home.
Yeah.
So as I said, there's wealth foundation that covers your assets. There's wealth accumulation where you make certain investments, you save money, right? There's wealth preservation, so the pyramid gets smaller as it goes up.
Yeah, as it goes up.
There's wealth preservation where you look at long-term care, because your health is also your wealth, right?
Right.
You look at long-term care and you look at other investments, and then there's wealth distribution at the top of the pyramid where you have a will, and in the event of death you have this being distributed, your assets being distributed in the way that you'd want to, right? Insurance and death benefits being paid out and that kind of thing. And that's something people need to understand.
Well, all right, so go ahead, because I was going to ask you a question, but finish, make your point.
Yeah, they just need to understand, and you know, there's nothing hard and fast about it.
No.
Every situation is different. Every situation. Think about it. If it is, you have a community with 10 homes, and those 10 homes each have $1 million in insurance.
Yeah.
Let's say something happened just like that. Take one breadwinner in each home. That's $10 million in that community alone. But think about one home having $1 million in that same community.
Everybody looking at that house on that corner.
Right? So it is a way to really protect your family. Right? COVID would have happened and we're still facing debt, basically. If people didn't want to accept that before in any capacity, definitely it's something we have to accept now.
And okay, so even along the lines of insurance, and maybe too, like, why it have a lot of stigma against insurance is the actual beneficiary part of it. Because something that was very key is the beneficiary.
Right.
So some persons may have heard instances of the beneficiary not being done accurately, hence the reason why they may perceive it to be. So just to expound on that, why in regards to having the correct beneficiary appointed.
So you could have two beneficiaries. There are two types of beneficiaries, I should say, not you could have
types.
two.
And which one is critical to have of the two types?
Again, it depends on situation.
Well,
you're married,
Yeah.
your spouse should be your beneficiary, and that is irrevocable.
Yeah.
And irrevocable means that they can't easily be removed. You have to go in front of an attorney, and both parties have to agree to sign to be removed from that policy.
Yeah.
Right? A revocable beneficiary could be a friend, a neighbor, a sibling, right? So spouses and children are irrevocable, right?
And even to that note, it's key, but is it possible for someone to take an insurance and they didn't put a beneficiary and the money goes
so
to...
Right, so automatically you don't choose a beneficiary,
Right.
you choose an estate.
Okay.
You choose
so-
estate. Now, the thing is, with that, with estate, you don't need to necessarily choose a beneficiary on your policy. You could leave it as estate, but you have a will, and your will is your last rights.
Okay, all right.
And your policy information could be documented on your will, and what you would like to do with the proceeds, and how you want that distributed. Your will is your last rights. Let's say somebody has a policy, has estate, no beneficiary, no will.
Well,
That's
yeah.
problems.
Well, not for the state.
Well, no, it's not for the state. But what happens is now that the family who's trying to claim that person's estate
Very difficult.
now has to go through letters, something called letters of administration and probate period and all of that. And these things take time.
So, okay, and again, not to even like point out or even, because personally for me, I have had experiences where agents would have approached me in the past. We would have done some business, and then along the lines, the agents themselves would have come back and say, well, excuse Mr. Powlett, at that time, I might not have been that versed in it, so maybe I could advise you differently, because it's a learning process. Because the reason why I asked the question, having you here today, is because we want persons to understand the value of insurance, and we just basically, all I'm really doing is like pointing out potential things that could have them thinking the way they think about
Let me
insurance.
ask you a question. As a husband, as a friend to your wife, as a protector, right? As a counselor,
Yeah.
probably as a preacher or a prophet, right? Are you comfortable knowing as a family man if,
By all means.
and I didn't even finish, but just to finish, I was going to ask, are you comfortable knowing that if today or tomorrow you were no longer here? And let me tell you, you see this word called death? If we're not comfortable, not with it in itself, but comfortable with the word by now,
That means you're not in an order.
something is wrong. But if
Even, and you know, even to that, like from a Christian standpoint, if it is that, okay, you are about to die, you could look at it twofold. So if it is that a man to die, as Christians believe, outside of faith, or whatever religion I'm being, there's always like somewhere that you could go. But if it is like you're not in an order, your house not in an order, your life not in an order, there's a level of anxiety there, of uncertainty there.
Yeah, and let me tell you something, and something we didn't mention under the household, right? The anxiety starts from death. You know why? How we getting money to bury you?
Exactly.
You know, there's plans for that as well, because funerals cost a lot of money,
Right.
right? Funerals cost money,
I
So-
can attest to that. Twofold.
right? Again, and a person needs to ask themselves. Now, you could ask, I asked you, are you comfortable knowing that if you're no longer here, would your wife be taken care of? And you say yes.
Yeah, that lifestyle.
Let
will
me
be
ask you
maintained.
another question.
Sure.
Given your current investments and your assets, 25 years down the road, right? Or let's say at age 60,
Yeah.
do you think that you're comfortable enough with what you currently have, the choices you have made, the sacrifices you spoke about earlier, to give you enough sustainable income so you don't have to work till 65 or beyond 65? Are you comfortable knowing that?
Yeah.
Right?
And even to that, to a degree, to that whole like having these things in order, because just being an entrepreneur do not tell me any policies that I have. Another thing, as you always mention, that I have to upgrade and get
You
more
must.
plans, because like if it was like I was in like a regular 9-to-5 job, the policies and the plans that I have, trust me, at that point, that figure would have been just thinking about what it is.
Right.
But to be honest with you, at the time taking that policy, and the reason why I now have to even upgrade and take an even bigger one, already I'm seeing that yes, it will be able to maintain the lifestyle that I'm at now, but because as an entrepreneur, I'm constantly growing. Hence the reason why you could update your portfolios and stuff.
Yeah.
So definitely.
So in addition to asking, you know, is your family financially secure? Are you preparing yourself for retirement? And retirement, I always tell people, retirement is not sitting down, buying our papers, watching news. Retirement is about enjoying the fruits of your labor. Not saying that you can't enjoy it now,
Yeah.
but to do anything you wanted to do at that point in time that you couldn't do before, whether it's travel, whether it's another form of business. You may take up a hobby. That's your time to enjoy, you know, what you've worked so hard for. Sadly to say, there's a huge percentage, and this wasn't now, this didn't happen over the last 2 years or 3 years or 5 years. There's a huge percentage of persons who are not really prepared for retirement, and there are many reasons for that. And what happens is that they're not prepared for retirement, so whether they're working or not, right? And what you're going to find happening is that they're going to be working at 65.
Yeah.
They're going to be working at 70. And it might be little odd jobs.
And
right?
I could share this with you. And like for me, I am a student of past persons' experiences, mostly past person failures. I am a student of that. And home by me, well, when you visit, it have this guy, he does come, Mr. Peterson. He come, he does wash on the car, he will come and clean up all the place. He used to work on a ship.
Right.
And he was the one, because I asked him, he is in his late 60s about, well, he's getting the pension now, so he hit the 70, but still he having problems doing that. He never really had a job to say where he was working at a fixed establishment. Yeah, he was always on the ship. He didn't put no company did any kind of insurance plans for him. And even because he didn't record stuff properly, how he lived this life, as fast as he come back, he live up himself, he helped this one, help that one. Now at this age, he every day has to get up, go by this one, do little small odd jobs.
Right.
When at that age, he should actually be rock back, talking to his grandkids. He gave me heart to heart. His daughter and wife would have passed away 2 years ago. But because of his situation here, the way he lives, I mean, I help him to the best of my abilities. He has been unable to see his family since he worked on his ship the last time he did, to come back here, and that was over 30 years. He has just been in this loop of just trying to find and make ends meet. And I asked him, I say, if it is, you have to do it all over again, what is that? And he said, to be honest with you, I would really get my finances in order. And at the same time, he didn't really know about insurance. He was just talking about, maybe he was just thinking about the NIS, like, or getting something from the pension.
Yeah.
And that is just to show you, like, the average person, the average man, the average woman right now, a lot of persons, although yes, I'm aware of it, persons might know somebody, they might hear the insurance companies, but they don't actually know the value and the benefit of insurance.
I think definitely there is the need for financial literacy. And financial literacy doesn't ask you or tell you go buy an insurance plan.
No.
It asks you thought-provoking questions. What would you do? Right? If I told you, hey, we have a plan, or I know of a plan that will give you X amount of money if you were to be diagnosed with critical illness. Let's say you were to suffer a heart attack and you needed surgery, but there's this plan that could give you $500,000 or $1 million or $2 million. And you won't have to throw a boat ride, a curricue, a barbecue, or develop a GoFundMe link.
Yeah. We see it every day on social media.
We see it.
Yeah.
We see it. And the fact that we continue to see it is because there is a need. I'm not saying that there isn't a need for insurance, right? Because there is a need. But people need really to be financially literate.
Literate, yeah.
Right? Because when you understand that, I couldn't be your insurance agent if you didn't agree that, yes, this is a need. I came to you and I think I would have asked you a question. And based on that question, you thought about something and you gave me an answer. And I said, that's a very good answer. But think about this. So really, you know, that is where we need to be. We need to ask ourselves, what kind of lifestyle I want to live? What is the lifestyle I want to provide for my family, my household? What kind of retirement I want?
Yeah.
Right? Do I need to work to the bone and grind till 65? I've worked in companies and see people go to work disgruntled and they didn't even last 5 years after. The last 15 years, I believe, is my opinion, and your tenure is very important. Because mentally, emotionally, physically, everything is affected if you're not happy. And you're going to get to 65, and at the end of the day, you don't last.
Well, and hence the reason why I mentioned very early, like retirement, and even for me, like being an entrepreneur, the different line of stuff, I mean, like it will come to a point where I kind put down the boots and like I'll just be from the back end.
Yeah.
But as you rightfully mentioned, a lot of time you see persons after the fact, and really when I see it come to the mindset, the mental, how they live and how they have to live because the necessary preparations weren't made, it tends to be the case most times.
You know what generational wealth is?
I'm very curious to hear your perspective.
Right. Generational wealth could take care of just that, generations. It's assets, it's money, lump sums of money passed on from generation to generation. If your dad, if your grandfather had $5 million in insurance, or let's say assets, and he passed that on to your father, and your father added another 5 million.
10.
So that's 10 million. And here's why we're adding on, because remember, generations and inflation, cost of living. And then your father passed 10 million on to you. What do you think you're going to do or supposed to do?
Put 5 or more.
Put 5 or more.
Yeah.
What happens is that it puts the generations in a very good place financially to make decisions and to maneuver, to really go behind dreams and aspirations. It empowers them, right? And that's what generational wealth is supposed to be about. Once managed properly, because it could go just like that.
And the thing is, that is very key. And like right now, I'm already wrapping around my head. Me and my tech guy, we're trying to come up with because it habit, like we want to create a Bible. Because oftentimes what I see with regards to wealth being transferred, as I said, that family, first the great-grandfather passed on the 5, then the granddad, he passed on the another 5. Now you as the son have to go and put 5 or more.
Yeah.
A family, or how to put it, a lot of persons doesn't want to do business with families because those families, or you always hear the thing like, you don't get to do family, because it's dysfunctional families. But if it is that you have proper functional families where the family is run by key principles, hence the reason a family Bible, where it is now that for generations past, if it is that, say for instance, yes, you have a will, but a family member or that breadwinner would have passed, unfortunately, as soon as that breadwinner passed, because everybody looking for a will to see what it is that they could get, if it is you have a family Bible now, and mind you, when you hear the term Bible, it doesn't always have to refer back to the Holy Bible. The Bible is just a general term. But the Bible starts in like, in regards to your definition of wealth, you now here in the definition of wealth, you now actually starting to build your wealth foundation. And you put down, you start recording as fast as you start to accumulate assets. And you create a new wealth structure so that when you die now, you have this Bible that you will pass on to the next generation. So that
Definitely.
they know when they get it, they can understand the key principles that the family was building on, so that they can understand instead of right now.
And it's not only they getting it and inheriting it, but the lessons have to be taught.
The lessons have to be taught. And the reason why I say the Bible, if you just leave it up to, okay, this one passed away, what are we going to do with it? Than actually having, like, as the other episode on Sweet Talk, the apostle talk about the prophet speaking, and so, like, you need to have someone, the start has to happen now for well-being of a family.
Yeah.
And that person have to have a future vision of where they see the family going. So this could be anything from a wealthy family owning multiple business to the regular household, but this family want to keep a particular land and maybe buy a couple of lots around that land and just eventually owning house of that land, and the family using that land as an asset to go to the bank and borrow against it and using that land to accumulate more wealth.
But the key thing is it must start somewhere.
It has to start somewhere.
The seed must be planted.
It
must be watered, it must be nurtured.
It must be nurtured.
And when the tree blooms, it's not about just picking fruits from the tree or deciding, you know what, I think I might need this tree for something else and cutting down the tree.
Exactly.
It's a constant cycle. Right?
Even in that note, with insurance, as a means, we talk about transferring wealth. So when you speak about that granddad transfer wealth, like how is this being done to give folks a better understanding? And when I say that, to even simplify it more, that wealth is being transferred. Yes, it's a will, but the assets are held where financially? That is through the bank, a credit union, or it could be vice versa, it could be either.
That depends on the person. Your assets, if it's money, it could be your insurance policies, it could be in the credit union, it could be in banks, right? It could be anywhere, right? But the thing about it is that you have this cash, you have these assets. Your assets could be whatever you own, your home, your cars, land, stocks, right?
And even to that note, with the assets, so okay, you say to what my great grandfather and my dad I put in 10 or more. But when it is now that through generational wealth, as you was explaining, now having that amount of financial wealth sitting somewhere, what is it are we to do now to actually use that instead of using the cash? Like, how could persons work around using that wealth accumulated from the generations to maintain it and grow it without actually pulling from it?
Well, you could look at investing, and you look at different forms of investment and what gives you guaranteed returns, right? Now, everybody's risk tolerance with respect to investments are different.
Yeah.
Some people are low risk, medium risk, and high risk.
Yeah.
And you decide where you want to actually take that risk. No, you don't just take a risk like that. You are guided by the wealth management professionals, right? If you're interested in a particular area, there must be somebody who can answer all your questions.
Yeah.
Right? Because remember, it's about managing what you have. Something as simple as you have $20 million in the bank, just saying, for the want of easy maths, right? And you need to do a business transaction, or you need to start a new business. You don't necessarily need to use your 20 million. You could put your 20 million somewhere, whether it be in a mutual fund or any sort of investment tool, where you could just be living off the interest, and your initial capital is protected, and all you're doing is using the interest
to fund
your venture. So let's just say you have this 20 million, and you could put it into a tool that will give you 100,000 a year. Just saying.
Average.
And you need 5 years. That's 500,000. And you take that 100,000 a year because that's your interest, and you fund your venture, and at the end of the 5 years you get back your 20 million.
Still
and decide,
20 million.
okay, let me go back in, right? It's become like you're renting your money, right? Let me go back in.
And the beautiful thing is, yes, remember this, once all of the correct assessments was made in regards to whatever investment you're making, that 500,000 that came out from as interest, whether it is you're investing it in, that is money working on top of you working for money.
Exactly.
Is obviously that 500,000 could potentially turn into even more.
Yeah.
So yes, you still come back out with the 20 million, you make 500,000 in interest, and whatever you was invested in would have accumulated even more.
Exactly.
Well,
But it has to start somewhere.
somewhere. It has to
So
start
really
somewhere.
and truly, we are supposed to, the wealth starts here.
Yeah.
Yeah,
And health, you see now you're jumping because we have the Wealth Make It Wealth podcast.
right.
Right, and that's the next edition that you'll be coming in, and we'll be speaking a lot more, getting on into more specific things, because as you rightfully said, wealth make it wealth.
Right.
Like for me, my profession being a caterer slash baker, in order for me to actually take this skill that I have and make any kind of earnings from it, I need to have a wealth of knowledge in making cakes.
Right.
Likewise for the mechanic. Likewise for the painter, or what you need a wealth of something to make wealth from something. Wealth make it wealth.
Yeah, definitely. And having the knowledge is part of it.
Only part.
Knowing how to apply the
knowledge. Correct.
Right? Because someone may know that my dad left this for me and he's no longer with us. But if they know that but don't know what to properly do with that,
Yeah. Don't
right,
yeah.
wisely, then they're not going to have anything for very long.
Somebody else with a greater wealth and knowledge will take that wealth and add it to their wealth.
Yeah.
Yeah. So hence the reason you need to be knowledge
But
and
in today's society, you know, insurance is basically the transfer of risk, right? In the event
mitigating
of
risk greatly.
an unforeseen circumstance, right? It comes in many different forms, many different fashions, as they say.
Yeah.
It serves multiple needs. Gone are the days where an insurance policy is just a death benefit to be paid out if you die. There are living benefits. There are so many other different categories under that umbrella of insurance. As we mentioned, you know, it's not only life, but health, critical illness, retirement, savings, education fund, and then you have home and property. It's a lot.
Well,
And it applies to everybody in a different capacity. You may need, or you may be able to have a $500,000 policy because that's what you may either need now or could afford. What people need to understand is that you could start small and build your portfolio as you grow.
yeah, and that's what I was speaking on. Like the plans that I would have taken now financially was that it was good, but already I've seen that I would have grown as a means of capital. Now having what it is like the extra cash, the what you were saying after.
Disposable income.
Right. So right now my disposable income has increased, and it will increase as time progresses.
Yeah.
So I'll need to update that portfolio. So as my lifestyle continues to expand, for me to actually be able to enjoy it, I need to grow my portfolio with my lifestyle.
Definitely.
More or less. Yeah. And Lyndon, I consider you to be a hero. A hero
I
to
think
the point.
that's a
and
lot to
it's a-
say about me. Yeah?
no, it's a testimony because, like, I was even speaking to someone recently on knowledge paralysis. Hence the reason why even I started Sweet Talk and going to do Wealth Created Wealth. Everyone have someone or someone that they tap into to get information.
Right.
The thing is, I get information, I share it with persons, but for some reason, they may not actually go to get the information from that person. So, to a lot of persons viewing this, it's nothing new.
Yeah.
But at the same time, just me actually making the effort to actually make the change to what I want to see.
Yeah.
Someone is actually looking at this now, and they could say, well, okay, it's because of I'm sitting here, you are sitting here, they are viewing, and now they could hear it from us. But the information is out there.
The information is there.
Right? And as I said, bro, I was suffering with knowledge paralysis because I've been able to grow as a young entrepreneur and understand a lot of business terms. And a lot of the guys I follow are outside, like in the US. And you could attest, I always call Lyndon. Today I was watching this podcast and I hear about how through insurance I could become my own bank. I always call Lyndon. And you always have the information to share. Right? So hence the reason why I see now I was able to do this podcast so that you could come here and elaborate. But definitely on the Wealth Make It World podcast, we're going to do it. But as I said, all the knowledge I had when you came and I started to break down different policies and stuff that I could do, man, it was like just hearing the information for me was like walking into a candy store and just seeing.
Right, but going into the candy store, right, and just seeing so much,
but
you still gravitate.
It was easy for me as knowledge. I was feeding into it.
You still gravitate to what you like first before you try something new.
Yeah.
So if you know you're into gummy bears, although you're seeing gumballs, you're seeing sours or whatever in the candy store, but you're seeing the gummies, you know you're going to tap into the gummies first. With insurance, in the decision-making process,
to take the letters first.
we look at priority.
Yeah.
As I remember earlier on, I would have said to you, you know, you don't insure a child and the parents have no insurance.
Yeah.
You start at the head. So you look at priority, and that's what portfolios and how portfolios are built. And your portfolio grows as you grow.
Correct.
As society changes, if there's need for you to make a change, you make that change because the change is going to be beneficial to you. As I mentioned before, products 20, 30, 40 years ago may not have the same importance in today's society.
Yeah.
So we always need to be, you know, abreast of the information and in the know. Right? And that is KNOW.
Yeah.
Not
N-O.
Right?
Yeah.
Because as I said, my passion was always the people. Everything I did, my passion was always the people. And it's not easy. I wouldn't tell anybody that it's easy. It takes a lot of dedication, a lot of patience. But
and even to that note, like some of the mentors that I have, and what a lot of persons they speak about, and I know the funny thing, a lot of insurance agents and the ones who might not be doing good or have a good clientele is because they don't really understand the industry that they are in. And when I say that, they are in sales. They don't understand that. And they don't know how to respond to no. So it have a lot of persons who hear about insurance, but you see the follow-up. Lyndon, your follow-up game. If you pull out, well, we don't go there, but your follow-up game on point. A lot of persons will reach out to someone, they'll share the value, but you have to understand it's something new that you're sharing with someone. And it's not that, I'm certain that right now, you have persons who you'll follow up with repetitively, and then out of the blue, you'll just see them pop up. So it's not that the information that you're sharing is not relatable to them, but maybe at the time they had to adjust. But following up is key.
I attended another client's business opening. Now he has a very good job. He has a very, very good job, right?
Very, very good job.
Very, very good job.
Another very,
Yeah, and he launched a business venture.
Yeah.
And he asked me to come, you know. I was like, no problem. And it took me 4 years from when I got his contact as a referral to actually meet him. And in 6 months, when I pulled up at the venture and I walked in, he walked straight up to me and embraced me and he said, "Thank you so much for coming." And let me tell you,
you're like a hero to person to understand the value of it.
Right?
Yeah.
And I'm not usually posting stuff on social media, but he did send me a message, you know, Lyndon, thank you, and you know, your professionalism and your patience and all of that. And I didn't post. I'll probably take about, I don't know, probably up 2 months, 3 months. And, you know, someone was like, "You're not posting this message by chance?" I'll post it, whatever. But I was happy that I did post the message. 3 people contacted me.
Because they see the value.
And they said, "Hey, I think we want to talk." Right? And as you mentioned before, I don't play with my follow-up game, so
Yeah,
they
you
are now
have to.
clients. But people need the information.
They need it. They need it.
In my line of work, in anything, people need to know that they have another way. People need to know that there is
There's a better way.
a
No
better
more
way.
barbecues and lunch and GoFundMe, insurance to do this and
Yeah.
just doing it early, not waiting. Again, when I see come to making sacrifices, as we mentioned, if it is you don't make the sacrifice, life will make it for you, and at the time life make it for you, you wouldn't be prepared.
Right? I mean, personally, when I meet clients and I ask them this question and that question, sometimes they're left speechless. Right? I had a client of mine in 2016. She would have reached out to me and said, Lyndon, I need to talk to you. And this was somebody I went to school with. We haven't spoken in about 20 years.
Yeah.
And we talked, and she said, this is what I want to do. I said, okay, this is what we can do. And to share, one of the things she did was critical illness. Sadly, she passed away at the age of 40 from a very rare type of cancer, like 1 in 1 million people get this.
Wow.
Right? But she still had that financing from her critical illness plan. Anything could happen at any point in time.
At any point in time.
Right?
So, I mean, great info. I appreciate based on what you shared. I mean, I thought I came gun blazing, but you was ready for everything what I threw at you. So don't worry on the well, make it well. I'm going to come back with even more questions, like more heavy hitting, harder ones. I'll even, well, after persons view this one, I'll have them even send me some questions. I'll send it to you, you send it to your people, make sure that you're okay answering it, because you have certain guidelines of stuff what you could answer. But I mean, value. And I just want to appreciate and show thanks for you actually coming out and do this. But first, I would like you to share your information, like Instagram. I'll put it down below, and mind you, see I put it because when you go on YouTube, you know, you go down below, just scroll down. So that information will be there. But the way you approach me and ask me the question that piqued my interest.
Yeah.
I want you, which camera you could look at? Because I want them to ask, do you want in the middle? Ask that same question. To the viewers, to that person, whoever they might be, whichever one of you want to, just put it to them.
Well, what I want to say to the viewers out there is for them to really ask themselves, are you financially secure? Is your household in order? Are you ready for retirement? And these are just some of the questions. When last did you have a portfolio review? And this is where it begins. This is where it starts. You can't move forward if you don't know what you have now. And you need to understand, not just know. And we're not talking about knowing by name, right? I have an endowment. That's a name.
Yeah.
What it does, that is the true key, and that is the value in the plan, and how it helps you with your goals and your aspirations in the future. Right? So, my contact info on social media, Instagram is my name, Lyndon Russell. Facebook, it's simple as that. No
underscore, no at.
No, just
well,
Lyndon, just
yeah.
Lyndon Russell. Facebook, Lyndon Russell. LinkedIn, Lyndon Russell. No financial guru, magician, you know.
and to add, like based on the discussion, I mean, this is just one in many more to come. Based on what we shared, if it is that you don't understand something, definitely in the comments, start the conversation, get the conversation going. In regards to the knowledge, I don't have it, so hence the reason why his information will also be down there so that you could go to him to get that information. All right, so again, guys, this was another episode of Sweet Talk, and I have my hero here.
Thanks
Lyndon
for having
Russell,
me. Definitely.
for the next one. All right, guys, stay tuned for the other episodes.